Okay, so today we're going to be talking about the entry model, which is super duper simple 4-step process. So this will be a nice, pleasant change for a lot of you. The main focus is on the funneling system. So this is what gets us engaged in a trade. We're going to be talking about entry model, of course, today. If we have time, then we'll get into this. Otherwise, we'll get into this on Wednesday or on Tuesday. But yeah, so the entry or the funnel here is designed to put us into trades while prioritizing direction and higher time frame, right? So it stops us from getting into the entry model when it's not time to get into the entry model, right? So, I mean, by definition, what is an entry model, right? The entry model is how are you going to get engaged in the market? Like, how are you going to enter, right? So we should only use that if we're planning on getting into a trade, right? So this LTF, or sorry, HTF, why is this backwards? Hold on. Okay, there we go. HTF, MTF, LTF means higher time frame bias, medium time frame. I call it find my way in price, but it's medium time frame liquidity basically. And then when we hit medium time frame liquidity, we get into the LTF entry model. Okay, so the LTF entry model is super duper duper simple. It's come into an area of liquidity. Okay, this is medium time frame liquidity. So let's just say this is could be M15, could be H1, depends how you frame your trade idea. So let's say this is the M15. Okay. Price approaches it. And now we have to assume that I'm not going to get into detail here, but we have to assume that like our bias is bearish and everything is in line with our bearish bias. Okay. From like the higher time frame down to the medium time frame. Okay. So we come into an area of, let's say it's like something like this. Okay. We got like equals or something, right? So we have M15 area of liquidity. Now we want to push into that. And this gets us engaged with the entry model now. Okay. So from here, we want to wait for a lower time frame order flow shift. Okay. So we can hop into the lower time frame, whatever that may be. If we're in an M15, we're calling this our medium time frame. We can look at maybe the M1 or the M5. Okay. This is all going to be developed over time through, testing and because every markets are nuanced, right? They don't always present themselves in the same way. So marrying any specific time frame is just a horrible idea. So we'll wait for displacement out. So displacement would be any substantial big move, and displacements are what causes one-sided moves or imbalances, right? So we wait for that displacement out, causing an order flow shift. Okay, so SMB is different than order flow shift. SMB would be, the break of an ISP caused by another ISP, whereas an order flow shift would be like a break of sub, okay? Or even you can argue a type 1, right? So we're going to get into that today, but type 1's ISBs, type 1 ISPs, when we're pro trend, we can call that break an SMB. When we're counter trend, we kind of want that extra confirmation. We're going to call a failure of the type 1 an SMB, right? So we have that extra like structural confirmation. So if we're pro trend, you can call that type 2 one an SMB. If we're counter, then we can call the type 1 the SMB, right? So general rule of thumb. Not concrete, didn't include it in the trading plan because everybody trades differently. Some people might be a little more aggressive. Some people might not be so risk tolerant, right? So again, something that we're gonna have to iron out through testing. Okay, so displacement. This gives us an FVG. So let's see, maybe something like this. Okay, now we have an FVG in here. And then all we do at this point is we set a limit on the base of the FVG and stop covering the high. This is the most basic entry model, right? This can come up deeper into the FVG. It doesn't matter. We're already engaged. Okay. And then the idea is that we just expect that this FEG holds and then pushes us down into, you know, our target, right? And that's literally the whole entry model. It's that simple. So we don't have to account for what's happening into the POI, what's happening out of it. All we have to do is we've come into a medium time frame area of liquidity. Give us an FEG. Limit the FEG. Okay. Limit the FEG, stop covering the high. Or, so this would be the high or candle 2. So the candle that causes the FEG. So let's assume that there is one candle. This is be your displacement candle, which pushes you down. And then you have like candle 3, right? And then your FEG would be in between the wicks. So your stop placements are either above candle 1 high or above candle 2 high. Okay, because with FEGs, we expect that price shouldn't really come above the candle that created the FEG, but to be completely invalidated, it would have to break the swing high, right? Because we can come up all the way up to this swing high and then reverse, right? So the safest bet is to cover the absolute high. Yeah, that's really it. There's nothing else to it. The entry model is stupid simple. Any questions regarding that?
Yes.
Oh, you go first.
Okay. I know that annotate real quick. I know you said that this was 15-minute liquidity, but then all of this here would be lower time frame stuff, or is that still on
just
15?
assume. Okay, yeah, good question. So that's the problem with these stupid charts, with these diagrams. So just assume that everything here after we tap in, right? Everything from here is all LTF. Okay. So assume that when we jumped into, where's my little circle tool? Hold on. Right. So when we jumped into this region, that we then hopped into the LTF. Okay.
Gotcha.
Yeah. But we'll go through examples of this. Any other questions?
So, Case, just from a 4-hour perspective, are you finding a FVG within an FVG?
So, I mean, that could be the case, but I don't really like stack FEG. So the main goal here for us is to be tracking order flow. Okay. So that's the whole type 1, type 2 ISP system is all about tracking order flow. And you don't really have to think about it if you use that system, which is the good thing. So generally, like the way that these markets move would be, you know, that's a tough question to answer because it's so unique and I can only really answer it through examples, but let me just move this screen over to the side here. Okay, so let's assume that this is the 4-hour I'm drawing right now, okay? And we have a big imbalance, right? Like FEG, right? And then we have like this liquidity buildup maybe before the FEG, not that that's necessary, but like when we come in here, generally what we're looking for would be, depends how we're framing our trade idea, right? But let's just assume that we're counting the H4 as our higher time frame. Then from here, what we can look for, okay, from this point, let's try and not confuse this too much. But as soon as we come into here, okay,
yep,
we've now jumped into the M15. Okay, so we're not stacking stacking FEGs inside FEGs like this, like refinements of FEGs. No, because an imbalance is an imbalance and you prioritize the higher time frames. Okay, so even if it looks like a balanced price range or balanced price action in here, then it's still an imbalance because you always prioritize the higher time frame. But now when we've tapped into here, what we could do then is drop into the drop into the medium time frame and then kind of wait for that entry model to play out again on a fractal level, right? So like we won't need that liquidity buildup and then liquidation, but we can get, for example, push down causes displacement, causes order flow shift, gives us a new tradable FEG that we can refine this way. right? This could be order flow shift. And then from here, we can either set a limit if the risk is good. And generally it probably is, especially if you want to just set a limit up on the top of the FVG like this, target the 4-hour low, or we can go further and then confirm it again like this on the 1 minute, because we know that FVGs are a form of liquidity, right? So the entry model is coming to a medium time frame area of liquidity.
And we're just doing
Or
this-
sorry,
we're just doing the same thing again, yeah, like we're looking for an order flow shift on the 1 minute and then going within that that FVG.
yeah. So if we look at this, right? So medium time frame liquidity or POI resulting from liquidity, right? So that would be this case here. So this is your liquidity and this is the POI resulting from liquidity. And then when we get into there, we would wait for, obviously, you know, does this add up, right? Is this FVG stacked with other confluences and stuff like that? If the answer is yes, then we would just call that a POI resulting from liquidity, right? Or a consequential order flow, I like to call it, which is the order flow that comes into play as a result of something happening. Okay. From here, then we'd look for that lower time frame, whatever that lower time frame is for this trade idea to play out, right? So displacement gives us FVG, enter, cover the high, and go, right? Now, the general idea here, or sorry, this is a limitation that I put on myself, and I think that you guys should too, is if the RR is good on the higher time frame where the entry makes sense, like everything's lined up, for example, the M15 here, and you can just set a limit on the M15, the RR is good. So imagine that maybe this is a little bit tighter, whatever, and you got like, you know, 6-7R here. Always take it. Always take it. Don't push, don't drop down in timeframes unless you absolutely need to, and the RR isn't there. If it is there, always take the higher time frame. This could be the 50-minute, it'd be the 5 minute, the 1 minute. It could even be the 1 hour. You know, it really just depends on the circumstance. But generally, if the RR is there, I'm always taking on the higher time frame, because as you drop down lower, you open yourself up to a larger margin of error. Does that answer the question?
Yeah, that answers it.
Right on. Any other question?
So if you're taking a trade off the medium time frame, what kind of stop loss are you using? Like how many pips?
Doesn't matter. Stops got to
Doesn't
be what the
matter?
stops got to be what the stops got to be. You got to get out
Fair
of that
enough.
way of thinking. That's
Okay.
that'll put you in really bad positions, bro, if you're looking at what the stop loss will be. And trust me, I'm saying that out of a good place because I was there. So generally, like, look at the RR instead, and even that is kind of a bad habit. But for me, like, I know what the only reason I do that is because I know what my like average RR is for my trading system. So I know if it's too low, then it just might not be worth it for me.
Right.
Yeah, but generally the RR is there because sometimes, you know, what you're targeting might be fucking 70 pips, right? Sometimes it might be 20 pips. So, you know, if it's 70 pips and you got a 8 pip stop loss or something because you're executing on the 15 minute or 10 pip stop loss, like the RR is amazing, right?
Yeah.
Versus, you know, if you got a 20 pip target and you're entering on like a 4 pip stop loss, that's still incredible RR, right? Off a lower time frame. So it really just depends. And the reason for this is as well is because the way that markets trend, different time frames are taking control, right? Because there's different speed or velocity of you know, how price is coming down to targets, right? So for example, if there's like a daily target in mind and we're getting very impulsive action on like the 4 hour, like for example, are we on EU right now? Yes, let's do this. For example, this is the 4 hour right now, and you could see that price is just going and going and going and going. It might not give you that many entry opportunities on the 1 minute, but if you look at these ranges, right, like 59 pips, this one, 65 pips, 80 pips, right? It just rolls over pretty quickly, right? You might not even get a chance to get on the 1 minute. But
Right.
I mean, when markets are moving quickly and you execute on the 15 minute, you're getting bigger moves in a shorter amount of time. So your bigger stop ends up not mattering versus if you're trading in some sort of, you know, like the backup in here, right? In here, where maybe you're framing your trade ideas off like the 1 hour, 50 minute, and 1 minute, you're getting smaller price movements. Well, I mean, it's still pretty big, but you can see that they're not as one directional. They're very choppy, right? So you're not going to be swinging for the fences. Generally it's pretty obvious about, or naturally you'll fall into the right time frame selections and just ignoring stops altogether. It's not the stop's got to be what the stop's got to be.
Yeah, that
Can't
makes
force
sense.
it. Yeah.
I was just wondering for like, I guess it'd be like time horizon of a trade too. Like if you take a 15 pip stop, you kind of to
Yeah.
get that RR, you got to wait a little longer, and then. But yeah, that makes
Honestly, you'd be
sense.
surprised, bro. You'd be surprised. My average trade is probably 2 hours.
That's nice.
Yeah, it's probably 2 hours I'm in and out. Obviously, there's some trades I might hold for 4 or more, right? But very rarely. It's usually 2 hours. And that's even when I'm entering on 15-minute. Like I took a trade a few weeks ago, right after news, and it was a 50-minute limit. And I was out of it within the next 2 15-minute candles.
Oh, that AO trade
Right.
was nice.
Yeah, I was out of it in
Yeah.
like in what, 30 minutes. So the thing is that it's not really about getting a bigger stop. What it's really about is avoiding going through the extra refinement of going down to the lower time frame, because a lot of times what'll happen, right, is, for example, in here, if you're waiting for this to then confirm on the 1 minute like this, you might actually miss out, because what it might actually do is just pull up into the zone and then absolutely plummet, right? So it's not so much about getting, you know, a larger stop or taking on less risk. It's about not missing out on a trade, right? So this whole entry model is focused on getting engaged in the market. It's not about getting the highest RR. It's just about getting inside the moves as they happen. Because for me personally, and I don't know about you guys, when I miss a move, it messes with my psychology, right? So if I'm there waiting for this all morning, and then on the 1 minute, the 1 minute never comes and it just taps in and starts going, that really messes with my psychology. And I found that even myself, I would try and catch trades from down here to make up for this. And it's a horrible cycle. Right. So yeah, the idea is just get engaged with the market and don't be fussy about, you know, insignificant numbers like the size of your stop or even your RR is kind of not that important. Yeah, just get involved in the market, keep your psychology intact. Any other question regarding entry model?
No, I think that's good for me.
Anyone else?
Nope, that's good.
Okay, yeah, so super simple. I'll give you guys PDFs of this as well as my trading plan. At the end of the week, I'm going to give you guys just like a checklist style trading plan. Then if you guys want to turn that into a flow chart or however you want to do it, it's not my thing, but I mean, you can. Yeah, okay, so let's look at some examples of this in practice. Okay, so I think it was you, yes. You mentioned something to me here. Let's see if
Today on you, there was no trade on the 1 minute, but like I mean there was. It's kind of messy.
let's look at it.
I would have taken it, but like still, that I was fucking 4R.
That's okay. So let's talk about this for a second.
Yeah, the question was like if the Asian range is considered like liquidity in general.
No, it
or
is.
like-
It is.
Oh, okay. So
I
like
mean,
I don't
any
count the
range really
ISPs.
is.
So I don't count the ISPs in it, right? It's not
Well,
valid ISPs.
You can still count them, but you just have to
Oh.
understand that Asian range can be used as liquidity, right? So you have to
Yeah.
form it with your higher time frame bias as well.
Yep, got you.
Yeah. 1 second. Give me 2 minutes. Okay, so, all right. Where are we? 20 is 8 o'clock. Okay, so it'd be 18. Okay, so there's your session low, for example. We'll call this Asian session range. Liquidity. Oops. Okay, so we have liquidity, right? So let's talk about this, for example. So avoiding ignoring like higher time frame bias and everything, right? Like we're just going to talk about 50-minute and below, okay? So we see that we've had
An SMB. Yeah.
push up here. SMB taps in, comes down. This one, yeah, a little choppy.
This one feels unbalanced.
Yeah, I know, but
ISB.
we're not really getting a clear body break, right? But in
Oh, yeah.
context, I mean, in the context of things, it's
Yeah, that's why like I
arguably
took the
valid.
ISPs
But yeah,
outside the range. Yeah.
I mean, when in doubt, I always say when in doubt, just ignore it and wait for clear price action. Like I wouldn't trade this myself, but yeah. Okay,
Just
so
in
we've
case.
tapped in. This is more to highlight an entry model if there's one. We've come into an area. We have imbalance. This is like the opening wick here. We'll put this here, 17. There we go. Liquidates the Asian range, and then from here, so we have a medium time frame area of liquidity, right? And the POI is kind of irrelevant, but we'll put it there for the sake of like confluences. But yeah, it's not. If you've noticed, the POI is not actually part of the entry model. Now what we would do is we'd look for a lower time frame displacement that causes an order flow shift and gives us an FEG. So let's see here. Tapped in, had a little liquidation, pushes up. So this would be a super aggressive entry. And then you have this one here, order flow shift, pushes down, gives us this push out, right? And you can see that the bodies are respecting. So what can you do? You can limit somewhere in this FEG and then cover that low. So you have, let me pull up the thing here. So you have candle 1, candle 2 that gives us the FEG, and then candle 3 that closes it off. So your entries are either at the base of the FEG, which is the entry model that I'm going to give you guys. You can do in the middle or at the bottom. And this is where your testing comes into play. So for this, in this case, I would know that I would just set it at the base, but that's specifically because of how the way price is developing and like the size of this FEG. So your stop placement can either be above candle 2, right? So this would be the one that causes the FEG. Above candle 2, and you can see that that doesn't get tapped into, or you can put it above the low. Generally, that's candle 3, but in this case, it's not, or candle 1. You could put it just above or below the swing low or candle 2, right? And then what you target, it's visible. What you would target is that high, right? And then, I mean, here you have some more imbalance to fill. So for me, I'd probably target like up in here, or at the bare minimum up in here, right? So this is a pretty valid trade. It doesn't really have the higher time frame intention behind it, but I mean, we do have that imbalance. And what do we know about lack of liquidity in a leg? It kind of tends to draw price to it because we've just taken out substantial sell side, and now the next buy side is above this giant impulse leg, right? Okay, so one more thing as well about the entry model is that all of our management happens on the medium time frame and the higher time frame. So no management happens on the lower time frame, okay? So we executed on the 1 minute, sure. should I go break even here after we've pushed up out of this? This is a question for you guys. Should I go break even up here?
Yeah,
Here,
that was better.
this?
Yeah, for me, yes. Mostly on the 15-minute high, but like it's too far.
So you're all wrong. It's what you should
Thank you.
do. What you should do is not touch it at all until you come
Okay.
above a 15-minute break. Okay.
Yeah, okay.
So, well, this could be right? So this is a 15-minute short-term high. So this happens to be right? But my point was that you don't look at the 1 minute. As soon as you get engaged in the market, you can literally hop back onto the 15 minutes. So this would be your medium time frame. Whatever your medium time frame is, go back to that time frame and do not go break even until you come up above at least a short-term like sub high, like a substructure high. Okay. Bare minimum, because what's going to happen is you're going to start tripping yourself up and say, okay, oh wait, we're coming into this extreme. I'll go break even here. Comes down, right? Reacts to this, for example, comes down, takes you a break even, right? In this case, it doesn't, but or you go break even above here, comes back, takes you out, right? So what we do is simply execute on the LTF, and that is it. The only thing that we do, period, is get engaged in the market on the LTF. Everything from trade idea generation all the way to management is all on the medium time frame and higher time frame. Okay. So break even here. BE. And let it ride, right? Because if our trade idea is built on the medium time frame, right, then we want the medium time frame to be able to develop, because that's the trade idea, right? So the general thing here is, if I could set a limit here, okay, I could realistically set a limit below Asian range, like so. Set the target, take this trade, right? The lower time frame is only used here for extra confirmations and higher RR. Okay. Again, general rule of thumb is that if you can take the trade on the 15, just take it on the 15. And I probably would in this case as well. But yeah, we can see that the lower time frame entry model played out, right? So as soon as we break this, we want to let the M15 in this case, or the medium time frame, to develop and give us reason to go break even, right? Because our stop's not protected. If our trade idea is based on the medium time frame, our stop's not protected until medium time frame price action develops, right? And now look, after we've broken that, we have an FVG. This is holding us in place. If price is to come back here, we can potentially look for continuation. We know that our stop's in a very good place. We're protected. And if it does come back down to here, we just know that we're completely invalidated out of the trade idea, right? Versus if we get into the trade here, or we go break even here, we get taken out. That doesn't actually invalidate our trade in any way, right? And what happens is then you see price kind of chop around a bit, come up, you try and get engaged again. It takes you out. You try and get engaged again. It takes you out, and then you're pissed off and you walk away from the charts, and then it goes without you. Right? Like, how many times does something like that happen?
Oh yeah.
A lot.
Yeah. Right. So again, going back to that idea of our job is just to get engaged into the markets and stay in the damn markets. Okay. And then when we break sub high on the M15, we can go B.
Do you take partials usually, or you just let it
I'm
continue?
kind of an all out kind
Oh,
of guy.
okay.
Yeah.
My style too. Okay.
Yeah. It's
You
my cup
ever-
of tea.
Have any discretion there to close it early, or you just set and forget, or fucking?
I try to set and forget, but yeah, I got some discretion regarding that. Usually that's around like time of day and news. Like the other day, what was that pair?
GU.
GU, yeah. So GU, I took a sell. Let's find that guy. That would be on Friday. Where did it really start shopping about?
Yeah, here I think. Wait. Or never mind here.
No, it's not even this, is it? All right, let's go back to the 15-minute. I'll find it.
It's up here somewhere, right? Like here or here?
Yeah.
Yeah, it was right in here. Oh, it was on Thursday. Yeah, it was right in here. Okay. So yeah, it was right here. Okay, sorry. So what was the question? Do I close it?
Yeah, was there
With
any
discretion?
discretion to close early?
Yeah,
Like if,
so
like in the way price action's moving?
yeah, so for me, that was my target was down here. Or my initial target, but I ended up closing it. What was that, like 12:30? I think I closed it on like this candle here. So the reason for that simply was because time of day, it was heading into 12:30. It was past lunch, and then price start to really chop. And I was like, okay, this impulsive move is completely done. It's just dead in the water. And I didn't want, you know, this to happen. That would have pissed me off way more than running and catching a few extra R, right? So it's really things like that. But for the most part, I'm kind of all in, all out. But if I notice, obviously, that I completely messed up and my analysis is wrong, then I have no problem admitting that and closing it.
Okay,
I'm not going to marry
Yeah.
my trade idea if it's a stupid one.
that's no good.
Yeah.
Another question with like this, what you've got here, the FBG. Are you, as soon as that FBG shows itself, are you waiting on the first tap, or is it still valid, or are you waiting for the second
It's
tap there?
still valid, and it doesn't matter how many times it comes up into here. So
So
as
it's
long
always
as long as price is not closing above, it's valid. So this can come up and wick like this, and it's still 100% valid. Right, this can wick through, push down, and close, and it's still 100% valid. It can wick in there 100 times. It doesn't matter. It's still valid. It's all about bodies, right?
Okay, so it's just like a first tap and let's go.
Yeah, it could be first
Yeah,
tap and
okay.
like, yeah, 100%. The way I kind of like to do it, if I miss the first tap, so if I missed getting involved in the first tap, what I like to do is go above the first tap and then set my limit just above that. Yeah, there's no concrete way for this, right? This is things that you guys are going to figure out through your testing, right?
Yes.
Yeah, but what I'm going to give you guys is simply limit the FEG at the base and then covering the high or the candle that creates the FEG, which would be this one, right? And then from there, you can have your target and whatever it is. I think this one got me what, like 6R or something. So my stop was a little bit up. I think my where I actually got in was a little bit lower as well. I think it was something like this. Yeah, that's why. So I actually got in, I believe I got in this candle after it closed, and then I just entered. I was a little late. What else here? So yeah, again, no management until we've come into an area of medium time frame. So for this one, we don't really have a medium time frame. We have, well, 15-minute is, but we've pushed down, pushed up, reacted to the FVG, right? Giving us an ISP, and then I'm trading the continuations, and I took 2 trades that ended up resulting in break evens. But for this one, right, like my target was down here, and I would probably have gone break even right here and just went all in, all out down here. Now, there are certain circumstances, like I don't want to get too into detail with it yet, but there are certain circumstances where I'll go BE because like we're tracking order flow. So I can understand that the 1 minute should hold as we push out of this, like, let's say we pushed out of this FEG. Where's the trade that I took here? Where's the trade? Let me pull it up. Okay, yes, got it. Okay. Yeah. So look, like I got trade 1
Yeah, and then trade.
here, and then it was trade 2 in here.
Yeah.
Okay. So right. So I took trade 1. It was something like this. I think I was covering this whole candle or something, right? And I was just targeting down into here, so 5R, and then the trade 2 was pretty similar to something like this. So I understood the risk involved, especially with my scale in. So I pushed, when we pushed down and I entered the second trade, I set this one at break even. And then as we push down further, I set as break even because I was saying, okay, if I'm right, I'm trading from pretty far like outside of my original point. So this would be that on the lower time frame entry model, this would be like the medium time frame draw on liquidity. And then these would be, this would be the POI resulting from the draw on liquidity. Okay. So I understood that I'm not trading from the high. I'm trading from a consequence of the high, basically. And we've had this buildup of liquidity tapped in. I know that I'm like in the middle of the range that I might need to go break even earlier. And if I'm correct, then order flow should really just push towards the draw on liquidity, right? And going back to what we learned on, what was that, Friday, about draws on liquidity, type 2 should take control, right? Heading towards that draw on liquidity. So I understand that, well, here's the type 2. This should hold until we get there. If it doesn't, then I'm probably wrong, right? So I understood that, and I moved both my stops down to here when we push below, just based on that. But again, that comes with time in the markets and skill and, you know, being able to think like that on the spot. But generally the safest thing in the entry model, or the model that I'm going to give you guys to build off of, is going to be pretty just like set and forget. And it's profitable. Like that's the one that I tested, is set and forget, which is like, what is that, 6, 7 or 7 or 8R with like a 45% win rate, right? Just hands off. So yeah. And there was no scale-ins in my testing. Any other questions?
Nope.
Okay, so what time are we at? 8:20. Pretty good time. Okay, so let's talk about the LTF, HTF, HTF, MTF, LTF model. Okay. So where is my text? What is it? I think I lost it all. Okay. Yeah, I lost it all. Okay. So we have HTF, MTF, LTF. Okay. So what is our job on the HTF, guys? And just using your knowledge of Forex in general, not just, you know, what I'm teaching.
Just build the
And-
bias.
Yeah.
Qualified.
Okay.
Identifying the structure.
HTF buy, excuse me, structure,
Trend.
trend. Anything else?
Maybe to find fair value gaps or liquidity. Yeah.
Yeah, it's fair value gaps, liquidity. And what does this all kind of surmount to here? Right, structure, trend, liquidity. What does this kind of all equal up to? It would be called order flow. Okay, so, and order flow is the main one, right? So like all of these combined kind of is order flow. But yeah, the main thing is HTF bias, and also like where is liquidity, because liquidity is a massive part of bias, right? So our job with the HTF is to identify HTF bias using draws on liquidity. Structure, or draws on liquidity and order flow, really, right? MTF. What is the role of the medium time frame?
Trade ideas.
Huge one. Trade ideas. And
Liquidity also.
okay, yeah.
Confirming our bias, like
Confirming our
Uh,
bias. That was the one I was like, well, trade ideas and confirming our bias were the two I was looking for. All right, our bias. Yeah. Let's put this one at the end here. Right. So HTF bias, right? So we have, let's rewrite. Okay, we'll get back to this and organize it after. LTF. What is the role of the LTF?
Entries,
Entries.
Oh. potential entries, I guess.
That's it.
Yeah.
There's no role.
Okay, anything else?
Liquidity, fair value gaps. I mean, that's all the part of the entry.
Yeah, all part of the entries. Okay, that's the only answer there is, entries, period. Okay, MTF as well is for management. Okay, so let's look at this again and go HTF. If we can sum up the HTF into 1 or 2 or 3 words, what would that be?
Order flow.
What?
Order flow.
Okay, it's all order flow though. But yeah, that's not a wrong answer. Let's get a little more for the framing of our like system here. How can we identify what the roles of these 3 things are in our trading plan?
Swing structure and trend bias, I guess.
Okay, so
Something like
HTF bias. Okay, so we call this one our HTF bias and narrative building. Although narrative building is across the board with MTF and HTF, they work together, but MTF.
Confluences for the HTF, right?
Yeah, confluences. That's okay. So what I like to say with medium time frame is I like to say finding our weight in price, right? So confluences in confirming our bias is the same thing, right? So we'll keep it the same.
Yeah.
Confirm bias. Okay, so the higher time frame gives us a larger outlook on what's going on in the market, right? We can understand where the waves of big money are pushing the market, where we're likely to head over weeks, months, days, period. The medium time frame is used to get that large, vast pool of information and then dial it in and break it up into separate parts. So for example, if we have draw on liquidity, so we'll call this daily or daily next likely draw on liquidity. Okay. And then we've just come into, oops, come on here. Just come into the draw on liquidity. Okay. So I'm going to map this out on, we'll just call that this is the 4 hour. Okay. So we've pushed into here, draw on liquidity. And now we've confirmed and we've had like an SMB. Okay. So let's just imagine this is an SMB. We've had an SMB and we're starting to push up. Okay. So the HTF bias is to come up into here, correct? The medium time frame now has confirmed it. And now our job is to find our way in price, because we know that maybe on the daily, it might be a pretty smooth journey there, but we understand on the medium time frame, it's not. On the medium time frame, you're going to get little downtrends, little uptrends, right? Fractal moves of the market. So we use the medium time frame to then find our way within this larger bias. Okay. So for example, we've broken up. Now we understand on the 4 hour that because we've broken up, that we're now engaged with this bullish bias on the daily. Now we have to understand where's imbalance on the medium time frame, where is liquidity residing on the medium time frame, and what would the journey look like in order to get to this point, right? So the idea is that, okay, well, okay, let's say we have an imbalance here. How are we going to get up here, right? Are we more likely to come up here, or are we more likely to fill this imbalance within this bullish order flow and then come up here, right? So that's the way that we have to think. When we push down, then you can go into the lower time frame again, looking for that entry model, right? Because you've just come into a medium time frame area of liquidity. Look for that entry model, take a trade. We can target here, or we can even target up here if you really want to hold. But again, that's not my cup of tea. But we do have that daily higher time frame backing that backs the trade idea, right? And we only have that because, we have this trade idea because we have the daily backing, and we've made sense of it with the 4 hour here, right? Or the medium time frame. And then that's how we generate trade ideas, right? So we have higher time frame intention, we have medium time frame area of liquidity, we have medium time frame order flow backing the higher time frame intention. So we're able to look at areas like this that other people might look at as a break of structure. I'm jumbling my words today. Someone else might look at this like a break of structure, but because we know the framing of our trade idea and our narrative, we understand that the medium time frame is going to do things like this on the journey to fulfilling that narrative. Then we could start entering at areas like liquidity grabs, right? Does that make sense?
Yep.
Yeah.
Easy, easy.
Okay, and then the LTF is simply execution. Right? And that's it. And we've just covered that. So again, trade ideas are all generated on the medium time frame after they've backed the higher time frame narrative. Okay. So the higher time frame narrative gives us an idea of what price is likely to do overall and what the intention is behind all of the moves that are happening in the medium time frame. And then the medium time frame is used to find areas that confirm that bias to then take trades. And the lower time frame is simply just to get involved. Now, with that being said, can we potentially take trades from here pushing down?
Yeah, because we had like a draw on liquidity.
Does anyone else have an answer?
Counter fucking trend.
Yeah. So counter trend, right? But
Yeah.
now what you have to be aware of is I personally enjoy taking counter trend trades. It probably hurts my win rate, but that's fine. I mean, the RR probably outweighs it does outweigh the lower win rate. But with that being said, when we're trading counter trend, we have to understand, right? Where is the next likely draw on liquidity? Right, on the 4 hour in this case, you can frame your ideas within like a leg like this on, maybe the 1 hour, 50 minute and 1 minute, understanding that we can target an area like this, but do not push for the fences because we understand how markets are developing to hit this daily target, how markets are developing to continue this 4 hour order flow. And we're just trading a pullback of this larger 4 hour order flow. And this is where trading gets super tricky, but yeah, what?
Just like the same thing as this.
Yeah, right. Like
Yeah.
this is a temporary pullback potentially.
Yep.
Now we don't know how deep this is going to go, and this is I don't want to really be getting engaged in here, but I mean we don't right. Like this is just a pullback, temporary pullback potentially, giving us a new ISP to then push up significantly higher, right? Whereas a lot of people, I would probably say most people now, are looking to get short here. For me, like, again, I don't really care too much. I'd rather just wait for some clarity. This was a pretty good trade, actually. But yeah, besides that. Yeah, right. That's actually a really, really good point. Like the next higher time frame drawn liquidity is likely up here.
Yeah.
Continuing
daily.
continuing the order flow on the 4 hour, right, is up here. And now we've pushed back down, taken liquidity. So just like this, and then you can look for an entry model to play out fractally. In this case, it gave us one on the 15 minute, and then we're still targeting this and we're targeting this, right? Yeah. And then this whole model here isn't strict to like daily 4 hour, 15 minute. This can be transferable to 1 hour, 50 minute, 1 minute, 4 hour, 1 hour, 15 minute, or 5 minute, you know what I mean? So it really just depends on how you're framing up the trade idea at any given time. And there's no strict rule for this. It's just how you're viewing the market, what timeframes are giving you the most clarity, right? Generally the way I like to look at it is like HTF. is daily 4 hour, or I guess it would be like weekly to 4 hour. Weekly to H4. The MTF is H4 to M15, and then the LTF is M15 and below, right? Or M15 to M1, right? So this is generally how I shape things up, okay? So I can have like HTF as my H4, then MTF as my M15 and LTF as my M1, or I can have like a daily higher time frame H4 and like M15, right? So any sort of mix of these that gives you the most clarity in the markets, okay? Because we're not marrying a time frame for the sake of a time frame. We're looking at all of the time frames to help give us the clearest bias to take a trade, because time frames don't actually matter, right? Like time of day matters, but time frames for how price develops is really insignificant, right? It's just a different way of viewing the data. Because realistically, if I want to see, for example, if I want to see a bullish engulfing in this candle, I can probably hop between time frames enough, okay, first try to see one, right?
Yep.
It's just giving me a different view on data that's there, okay? So marrying a time frame is completely irrelevant. And this, we only use time frames to help give us clarity in the market of, you know, the data that we're looking at. Do I want to get deeper into this rabbit hole here? I think probably save daily bias for a video series. Yeah. Okay, so how's everybody feeling about this? Is this confusing, or are you guys catching on?
It's all good for me.
Any questions?
Yeah, I'll get the M15. Just from my understanding, the H4. So like, so if you go into the H4,
Yeah.
and you get the FVG, you get the tap into the FVG. Once you get the FVG tapped, it's then looking for that order flow shift on the 15 minute to go and find another FVG on the 15 minute. Is that right?
Could be, yeah. That's so it's not super strict, right? You have to actually build a context around what's going on as well. So for example, right? This is a perfect example right here. So we've broken
Yes.
above,
Yep.
right? We've broken above.
The FVG.
We have a beautiful FEG here. Do we have to wait for M15 to start to go through this whole process of liquidating both sides? No, absolutely not. We have to look at what is happening in order flow and then make a decision, right? So in this case, let's see, breaker structure, we have this beautiful FEG we've tapped into, created this Asian session range, liquidated the Asian session range, and this is where bias building comes in, right? So we've liquidated now a 15-minute or a medium time frame liquidity pool. Okay, so we've liquidated a medium time frame liquidity pool inside of a 4-hour FEG. We know that this FEG should hold and should push us up. Now we've built a narrative inside to back that idea. So again, using the H4 as our higher time frame in this case, this is our leg. Using the medium time for the M15 as our medium time frame. Okay, so finding our weight in price. How is price going to develop to come take out this high? And then here we have a liquidity pool. We've tapped below it. So that's the M15 take on liquidity. It's in the higher time frame area, confirming the bias. Now what?
Take an entry.
Right? Because we've come into the M15 area of liquidity that engages us into the entry model. I can see if there's an entry in here, right? So I like to hop in between like 1 minute, right? Pushes out, gives us that little order flow shift.
Yep.
Bing, bada, boom. Let's see on the 1 minute, do we have clarity? So what I like to do is hop between the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, right? Kind of
And then
find
we-
some clarity, right? Because
After that order flow shift.
what's that?
You're just looking for anything after that order flow shift. Like once you
Well,
got that
yeah,
order-
I'm looking, so I'm not looking to confirm my bias that way necessarily. What I'm looking for is just to see the data in a different lens so that I'm able to make better decisions, right? And either way, I didn't need to do that in this case because on the 5 minute, you can see we've had the order flow shift.
Yep.
push down. We got a little fill of imbalance here. This is holding. This is not coming back into, and that's because we're stacking POIs here, right? So in this case, this would be your breaker block, which you guys will learn all about in the PDF and video series that's coming out. And then you have an FEG stacked on top. This FEG, beautiful, beautiful entry. Oop. By stacking both of these together. Again, right? Candle 1, candle 2, candle 3. We can either cover candle 1 if we want to be safe, or we can cover candle 2, right? So it's just, this is what I'm going to give you guys, which is entry on the base of the FEG, or the first point of entry, and then limiting on there, and then covering the stop below the low in this case. And then what do we target?
Okay.
What do we do from here, guys? Right?
So
So we've just engaged with the lower time frame. What do we do? And what do we do right away?
10 minute.
What's
Let's
that?
go to the 15.
Minute.
10 minute.
Go to the 15, right? Where could we go break even after we've engaged from 1 second. After we've gotten engaged in the trade, where can we go from here? Where can we go break even? Right here. Next high. No need to look to the left. If we see a break of structure continuing this order flow, right? Because what's happened here to the left does not matter at all. What matters is the order flow as it's progressing, right? So if this high wasn't here, sorry for cutting you off. If this high
No, it's
wasn't
okay.
here,
Sorry.
if this high was below this low, then I would say this high, okay? But because
okay.
this high is already broken and engaged us into the into order flow, into bullish order flow, then we're looking at this high, okay?
Yeah.
Yeah, so as soon as we come up above here, break even, and we should be off from there, right? Because now look, again, we're waiting for that MTF to develop, build that order flow, and then our stop should naturally be protected. And you can see we have like a clear FEG here and a clear one here, and it's probably realistically it's probably a breakaway gap, and we're not gonna come into it at all, right? We're probably gonna react to these wicks.
So
And there you go, right? There's probably a scale in there. Yeah.
So because we're continuing order flow,
Yeah.
does the premium discount count in this situation, or are you just going to be like, well, we've already broken structure 3 times, we can play the FVG because we know that order flow is bullish at the moment?
Yeah. So the premium discount thing is not a strict part of the trading plan at all, because we're focused so heavily on order flow, and we understand that the 4 hour, so our HTF in this trade idea is 4 hour, right? From here to here, right? We've pushed down into order flow, a potential area where an ISP can be created on the 4 hour, right? So this would be a type 2 ISP. We understand that. Now we've confirmed it with the medium time frame by taking liquidity. We now know as soon as we have that order flow shift, we can predict that the job is done, right? We can say, okay, everything that's needed to fulfill this higher time frame bias is complete. There's very little reason to go down. It should target this as the next likely draw on liquidity. And what do we know about draws on liquidity? Is that type 2 should just hold, and we should basically go straight there, right?
So
And
another question.
what's that?
It's another question. So
Yeah,
because that first tap we've got into the 4 hour FVG, right? We've
Yeah.
liquidated 15 minute. Would it be an aggressive entry if we entered on that liquidation and then just covered the 4 hour FVG on the 15 minute?
So you're saying if we just drop straight into the 1 minute here and try to get in? Or what? I mean, that's kind of what we did, right? Sorry?
I'm saying because we've got that liquidation, but obviously it's an order flow shift again, but then we're order flow shifting, like you're waiting for that extra confluence for that bullish move on the next order flow shift. Because the liquidation could potentially be another order flow shift.
You mean to the downside?
Downside, yeah. So I'm just saying, like, could we like in this situation where we've got the 4 hour FVG, right? We've got the first tap in,
Yeah.
and then we go down onto the 15, and then we get that liquidation of that 4 hour.
Yeah.
Could we enter on the 15 on that liquidation?
On this liquidation here. Yeah, that's what you're saying. This one right here.
That one right there.
You could, but where are you gonna put your stop, right?
Yeah, okay. All right. I get you.
That's the thing. You could, there's nothing wrong with that. You absolutely could, but where are you gonna put your stop?
It's too low. Yeah.
Yeah, so you're gonna get a lower arc trade.
Cool.
Now, again, you might be thinking, okay, what about this area here, right? So, we've tapped in, and how do I know that this is not going to run? So first off, it comes into context with things like time of day, as well as, where's price coming from as well. So in this case, we had news pushing down into here. You can see here, right? We've liquidated, yes, but there's no clear stop placement. And there's no clear medium time frame order flow shift. There's nothing for us to take a trade from. Whereas here, we've now liquidated a medium time frame that confirms the higher time frame, right?
And we've
Higher
got
time.
15 minutes as well across
Yeah.
those
We have
highs.
liquidity to take clearly, but the main thing here is that this is our higher time frame is the 4 hour, right?
Yeah.
So if the higher time frames are 4 hour, then we know that the 15-minute or the medium time frame, needs to confirm the 4 hour. And in this case, you don't get any confirmation, but you do here when you sweep out into an area of liquidity, right? So again, one of those things that you're going to really develop over time. It's not going to be the clearest thing, but for the sake of the haters, I didn't know what the hell was going to happen in this price action. Right. And there you go, right? That's the entry model in essence right there. And we're going to talk about this where I said that this is likely to be a breakaway gap, meaning that it doesn't fill. And we're just going to come into here. That's part of stacking, POI stacking, which is when we do see, order flow as it's coming from like a high value area, like liquidity, pushes up like this. We're going to look at that FV. This is that first line of defense stuff that I was teaching you guys on Sunday, or sorry, on Friday. This is it in action on the 15-minute, right? So we've come up into this area. And now that's the first line of defense stacked with an FEG, and we're off. And this would probably be a beautiful potential entry here. And going for that 1, 2, 3 candle rule. Candle 2, you can set a limit below this. I would probably put it like halfway into this FEG just to be safe, or you can cover the entire low, or even this candle here if you really wanted to. But still, even for a scale in, like, you get this trade gets you, 8R, and this one gets you, another 3R. That's a lot. Right? Even though that they're taking on different time frames, still a big, still a large amount of money. Or if you really wanted to, you can add another 6 to it, or higher, depending on, where your stop is. Any questions regarding the entry model?
That clarified for me. Thanks, Jay.
What'd you say?
I said that clarified it for me. Thank you.
Oh, no problem, bro. Anybody else?
Nope. It's clear as fuck.
I'm good.
Yeah. How you guys feeling about this entry model and compared to what you guys are used to? I want honest answers, not you, yes.
It's,
He's got his own.
I don't know. I like it. I like the idea of limit
it's easier.
orders.
Yeah, limit orders, only limit orders, which is super nice. No
Yeah,
stops, no markets, nothing. I mean, you can market obviously if you're in the area, but yeah, limit orders all the way.
I mean, it's super easy. I usually waited like till price comes into the, let's say this break right here. So it happened. And usually I will wait like for some liquidity build and then price to come like over here
Yeah,
at the last.
and
And then
it never happens.
I mean, it happens, but it's not that I cannot enter every time. Like I had one trade per month, something like that, but it was profitable.
Oh no, yeah, okay. Well, it happens.
So
but
you
it's
are
not-
waiting so much.
it's not day
it's
trading.
not every time.
Yeah,
It's not every time.
yeah.
Yeah.
It's not day trading, and you can those trades when they do happen, and that fits our model too, right? Like those types of trades that fit the model too.
Yeah, and usually these trades like runs into like 20 RR, 30 RR.
Yeah.
Like usually it's like that. I don't know.
Exactly. They'll really run. And I mean, yeah, that's when you're waiting for extra confirmations, right? Which is like even here, like this is already that 15-minute buildup of liquidity, and then you're waiting for that again on like the lower time frame. And yeah, usually those ones when they happen, you can really confidently take a trade, but it's not necessary, right? Like we understand right now that order flow here on the 4 hour is developing. We understand that there's some sort of higher time frame draw on liquidity above us. We don't even need to know what that is yet. But right, like the obvious answer is up in here. So we understand that there's something magnetizing and pulling us up. So what we would assume is until we hit that draw on liquidity, that what is it, guys? When we have a draw on liquidity on target, not you, yeah, someone else. What do we expect of order flow?
The second type holds.
Type 2s hold, right?
Yeah.
So on the 4 hour, where's the type 2?
Right now is right here.
Or before that, like before our entry. But yeah, you're right.
Oh yeah, it's like here.
Yeah, that's right. So the type 2 is likely to develop in here. So then we use the medium time frame. So now we know that the higher time frame for our trade idea is this 4 hour order flow. Okay. Regardless of what our higher time frame is for our trade idea, we're always looking at daily bias. And the reason I haven't gotten into that yet is because that's a whole segment on its own. Right, like there's so much detail in daily bias building that I can't just fit into this video, because I considered the daily to be completely separate from this whole funneling process. Although your higher time frame in your trade idea generation could be the daily. Hopefully that's not confusing.
I have a question about the entry now. I just remember something. Like, let's say when we like right here, we tapped into this price. And then are we immediately go in 1 minute and wait for the 1 minute order flow structure shift, or I should like see if there is like on 15-minute or also order flow shift before entering the trade?
Okay, so because in this case we're following 15-minute 4 hour order flow, we understand that as soon as we tap into this FVG, there's a pretty good probability that we're just going to go, right? So what we have to do is make sure that we have a medium time frame liquidity buildup inside this FVG. If we don't, then we wait for it. Okay, because getting engaged to the LTF means that we've hit a medium time frame area of liquidity, right? That's it. In this case, we've hit a medium time frame area of liquidity, and it's at the right time of day, right? So this would be like London Open, right at London Open, which again we'll talk about that too. So because of we've fit that criteria of hitting medium time frame area of liquidity, it's on side with our higher time frame bias, we can immediately get into the lower time frame. But again, lower time frame doesn't instantly mean 1 minute, first 1 minute candle, right? Like I can wait patiently, hop between time frames, get a better view of the market, make sense of it, and then get engaged, right? So we've had that order flow shift. Doesn't mean that I'm just going to enter right here. I mean, that's probably a pretty good entry, I'm not going to lie, but we have to stack our POIs, giving reason to, why we're going long. So we've stacked POI here. We have this push out, reacts, push out again. If we didn't get involved when it comes back down, you'd happily be able to get involved here. But yeah, just to answer your question like that, if we've hit the medium time frame liquidity pool, yeah, you get engaged.
Because the reason I'm asking is like maybe over here there is some order flow shift, but like on 1 minute, but on the 15-minute you cannot see it. That's why I'm asking.
Okay, that's a good question. But the thing is here, right, is that we don't have a medium time frame liquidity pool. Like maybe this is it, and maybe I'd be a little bit hard fought, especially considering there's news. So we have to weigh in a few other factors as well. But yeah, it's possible. I mean, let's look at it. Okay, it taps in and goes. There's no trade in here for you. And by the time it comes back, there's nothing to really react to. And it's already getting towards the end of the day. But yeah, so that's why we pair in things like time of day and that kind of time of day and daily bias, liquidity, different types of liquidity and stuff like that. Yeah.
Okay.
Hopefully that answers the question. Again, that's another one of those things that comes with testing, right? So I know that kind of sounds like a cop-out answer, but you guys will realize soon enough. Yeah, so medium time frame area of liquidity. We can go on to 1 hour as well and see. Like you see the difference here between, and now if I hop into the 1 minute versus, or so the 1 hour versus the 15 minute, you can see like, okay, we've pushed down. We've come into an area of, well, we're reacting to something, right? We've liquidated heavily and we've pushed down and we've not had any type 2s to really come take out. So let's see on the 15 minute. Yeah, so we'd have a type 2 here. We've liquidated it. So, I mean, yeah, you might have been able to. You might have been able to look at that. You might have been watching the chart there. Oops, what's going on here? What the hell happened here? Okay, yeah, you might have been watching the chart. But generally, another thing is that all majors, right? We're trading all major pairs, right? We're trading EU, GU, UCAD, and AU, right? They're all major pairs. So if one pair is not clear, like so, chances are another pair might have a better trade opportunity, you know, at the same time. So yeah. It's another
Gotcha.
thing that we'll do is we'll stack we'll look at correlations as well, which will help us to build a trade idea. You know, like this one might give us a trade idea, but all the other pairs look like shit. You will just pass up on it.
Yeah.
Any other questions?
Nope. Not for me.
Yeah, we'll look at we'll try and find another trade idea here. Okay. So we have this one. This one I didn't take. I actually took the short from here. I didn't take the long, but you know what? Maybe we'll talk about both of them. Okay. So daily. Okay, so on the daily, we pull down into the FEG. We're respecting it with bodies. So we're expecting bullishness coming out of here. We've had this breakup. So we've had this big push up here, but it didn't really break anything substantial, right? So I didn't look at this initially as us being bullish. I was just looking at this as us coming up to push. Let's look at it like this. Okay. So taking liquidity, pushing us up into here, and then potentially coming lower, or at least, you know, coming back into this range. And from here, let's go to the 1 hour, 4 hour. I had a long term on here from the 1 hour, and then these were all 1 hour ISPs. Right. So you can see this, right? So that's why this was a long-term one. So I understood that we could liquidate all of this and then potentially from here be putting in a new long-term point, right? Because we know that the way that these markets develop is something like this, right? And we understand that, oops, these are all ISPs in the making, you know, possibly. And then the highest points are generally your swing points, right? Should be this one and this one. So we understand now that just because we've broken ISPs doesn't mean we're just going to go up forever. We will eventually produce a new swing point. So that was how I formed that bearish bias here. And then this is that FEG. I can delete that for now. Reacting to this region here. Overblock. Okay. So as we've pushed down, pushed up, pushed down again, I had a bearish bias here because I assume that we've put in a new swing point and we are waiting to create the next ISP to then continue and push down below all this liquidity, right? That was my bias. Does that make sense to you guys? Does that sound clear?
It does make sense to me.
Okay.
It's an ISP in the making.
Yeah, so that
Yeah.
was my idea here. So what I look for, I looked for an area of medium time frame liquidity. We had the higher time frame bias. We had medium time frame liquidity here. Okay, so we have this FEG. And then I was looking for, I stacked in this as well. So this was the previous daily high, which is a form of liquidity, which we'll get into. Okay, so previous daily high. And as soon as we came up above here, I understood that, okay, this could be the ISP in the making. It's reacting to the extreme of this FEG. There's very clear liquidity to target on the other side. I have the backing of this long-term structure point, right? The daily is very bearish up until this day. So I'm looking to continue this, and I'm using the medium time frame to then find my way in price, confirm this bearish bias. And as soon as I came into that medium time frame liquidity pool, I was able to drop down into the 1 minute. We've pushed up, pushed down, looking for that order flow shift. Of course, you don't get it yet. So you have reaction 1. Then here you have OFS. And then over here, we have this. We've reacted. So we've got 1. Make this green. We have 1, 2. Broke sub. And what do we know about draws on liquidity, guys?
They magnetize.
Yeah. And what happens with type 1s and type 2s?
Type 2 holds.
Type 2 holds. Brian, where's the entry? Brian or Chris, any of you guys?
Gotcha.
I didn't map it. I didn't map it on the chart yet. So it's a little hint.
Entry. Stop.
Brian, does that check out or is that wrong?
Entry, stop.
Either or is completely fine. Both
Yeah.
absolutely acceptable. Yeah. Both those are 100% right. It depends, right? Like if you chose this one, you wouldn't have gotten in. If you gotten on this one, you would have gotten in. And that's why for the foundational trading plan I'm giving you guys, it's going to be the lowest hanging fruit for entry and the least risk for the stop.
Okay.
Yeah, but you're 100% right. Both of you guys are 100% right. Right. So what do we know about type 2s? Type 2s hold. So if we're truly in bearish order flow, this should take control, right? And that was my entry. Right. So again, simple entry model. Medium time frame liquidity with higher time frame backing. Lower time frame order flow shift, displacement that causes order flow shift gives us an FEG. Enter on the FEG, don't hesitate. Right. And I think this
Nice.
one gave me, where did I take it off? Why does this thing keep doing that? Don't go invisible. Visibility 15. Right. And if I'm not mistaken, I just took it like down here. End of day. Yeah, 12 o'clock.
Question.
Yep.
Would this be then our next area to target though? Liquidity
Yeah,
wise?
so that would be, yeah. I was
Okay.
break even here. But based on time of day,
Where you
like,
were looking.
yeah, so realistically what I thought was that we were going to come down here, right? So
Right,
I was sticking to that, right? My target was down to here. But then I realized, okay, it's getting to the end of the day and I'm not holding overnight. So if I'm not mistaken, I think I just took it like right in this FEG. And that was because of, again, POI stacking, which we'll talk about, right? So we have this FEG and then we have this whole bearish or bullish order block, right? That's newly formed, which we're going to talk to. And that's basically just a form of S&D, right? This is the whole sell to buy move, right? To keep it simple.
I have one question
Gotcha.
about the structure.
Yeah, what's up? And look at the FEG, bodies respected. Yeah.
On the left side where you map the swing structure and yeah, right here.
Yeah.
So shouldn't this technically be the swing high? Because if we look the structure, this should be also ISP, right? To the downside.
It depends how you look at it. For me, I didn't view this as a sweep and it doesn't fill imbalance. So I was not looking at it like that because yeah, this was just taking out sub, right? So this was just a little pullback, taking out sub. And this one, albeit I did get a little confused. I initially thought that this was an ISP because we've taken out some structure and gone, but then this one kind of just canceled it out and then we pushed back. So I framed my trade ideas around this and that.
Okay.
Yeah, but if you viewed it like that, the way that you're talking about it now, you'd probably have been right and then been engaged on the right side and been able to take buys where I was taking
looking
shorts, right?
Same. Yeah.
Yeah.
Exactly.
So going back to what I was mentioning probably earlier in this whole program was your bias could be completely wrong and you can still be profitable, right? It's all about framing your trade ideas. And admittedly, yeah, my bias was wrong, right? But I stuck to my rules, right? And my analysis was sound overall because I stuck to my rules and I was still able to profit off of it, even though I was completely wrong on the bias.
Yeah, the art
Right.
of trading.
Yeah, exactly, right? So you don't
Yeah,
have
but
to
you gotta trade.
Yeah, you don't gotta be right. You gotta be strict.
Yeah.
Right? We're day traders. How long did I hold this trade for? An hour and 30 minutes. Right? So an hour and 30 minutes, who really like, yes, I had my trade idea was framed on being long-term bearish, but I mean, did I really, it's not like I was holding a trade for 20 days. So it doesn't matter. Right?
Nice. Yeah.
Yeah. Okay. And then on the flip side, if you did have this as your bullish bias and the bullish side of this has a lot of things stacked up with it as well. Like you have your S&D zones, you have that, that daily FEG that we came into and we've had this breakup, we've pulled down, we're respecting, we've liquidated, we've reacted to here as well. So let's actually
The far right you had imbalance.
I just made a mistake here. I saw this like as in liquidity and I was expecting price to move a bit lower before continuing higher on. So I was looking here for the sells that day. And actually what happened is just melting to the upside.
Yeah, I mean, that fits as well, right? Like we can see that this would be an ISP, right? And we've pulled up, liquidated, we've broken structure. And I mean, it's at 20 o'clock, which is what is that, 8 o'clock? So, I'm not trading at that time, but there may be something that fits the plan, but realistically, right? What's the high of this and the low? 40 pips, you can profit something.
Asia.
Yeah,
So that's Asian.
That'd be Asian session, yeah.
Yeah.
With 40 pip range, you could probably profit off that regardless, right? And that's again going back to, you don't need to be right to profit.
Yeah, I was expecting for Asian to be taken out and then just going to the downside, but it just go to the upside.
And that's, natural when we're transitioning on a higher time frame. It's very confusing of where we're going to go, but you can still trade this. What other people see as chop, we see as opportunity, right?
I mean, if I had this plan 1 week before all this price action happened, like I would catch all these buys to the upside.
Yeah, man,
because of fair value gap and
right?
Things. Yeah.
Like I know people that have caught this trade here, right? And if I didn't, because I was still kind of holding on to my bearish bias. But I didn't take any trades in here. But yeah, looking back in hindsight, it's extremely clear, right? Like we have a clear break here, body closure. Pushes down. This ISP fails to put in a new low, so it's unconfirmed. It gets broken out, right? It gets taken out. This is an ISP. This ISP gets taken out by this ISP. What do we get?
SMB.
Smart SMB. Yeah.
Smart money break, right? Smart money break. I was short from here, still profited, which is awesome. We come into this region here. From here, we could look at how price pushes out. I think there was maybe a trade on the 15-minute. Yeah, so we have the 1 hour as our higher time frame. We have a clear draw on liquidity target. We have another clear draw on liquidity target. As we come down, push down, we're looking to get re-engaged. And re-engaged by type 2's holding, right? Type 2, if type 2's are holding, you're re-engaged in the market. It doesn't need to liquidate, and then break structure and all that stuff. But type 2 holding, yes, it comes a little bit below. But then you can clearly see that it comes back up and it starts to be respected. we have a clear break of structure here. This is your clear order flow shift, right? So order flow shift is not an SMB. SMB carries more weight, but an order flow shift is basically an early sign that maybe an SMB is going to happen. In this case, the SMB already happened on the higher time frame, so this is just like getting us back on side. What do we see here?
Okay.
Beautiful FEG. What time is it on this one? 21:30. What time is it here? Perfect time of day, London session,
London, yeah.
right? We've taken medium time frame liquidity. We POI stack here, taps in. Can we get a trade? And we'll see. Well, first off, what I like to do is this. If I set a limit here with my stop below, what's the RR? 4.8 pip stop, right? I'm not even getting into the lower time frame. And I'm targeting right up here. You know what I'm saying? Going back to that rule of thumb. If you don't need to go to the lower time frame, don't go to the lower time frame, period. No ifs, ands, or buts. Look, 7.94 R. If I was to go on the lower time frame, chances are I'm not getting engaged with this at all. Yeah, like I don't see any clear entry, at least right now. You can try and catch order flow as it develops, but
Wouldn't
you-
this be the Asian range
Potentially
low
here.
that would be used as liquidity, if that makes sense?
100%. 100%.
That was the
There's-
other example that you showed earlier.
This is a wait, is this the same example? No, this is a different example.
No,
No,
different
I'm saying it's
example.
similar. It's similar
yeah,
to
yeah.
the
Yeah.
previous one.
100%, right? So this on our medium time frame is this our medium time frame drawn liquidity. We have the higher time frame backing. We have a beautiful entry. Don't even need to get into the LTF. If you wanted to get into the LTF, you could, because this is our draw on liquidity, right? And again, what do we know about draws on liquidity?
Type 2 holds.
Type 2s hold, right? So until we hit this draw on liquidity, type 2s hold. This is a type 2. First line of defense. You could potentially have gotten involved here. Stop below candle 2 or below candle 1 and just taking it at least to the draw on liquidity. Yes, it's not great R, sure. But I mean, if you really want to risk it, you could. But the best trade ideas come from down here. What's that?
I think 3% is like more than enough.
It's way more than
Depends.
enough. Way
Yeah,
more
it
than
depends
enough,
what
bro.
account do you have. Yeah.
100%, way more than enough. I would take this trade all day, man, all day. And then here, because I understand that I'm trading 5-minute order flow, right? That means that I can now try and confirm this with the 1 minute if I really wanted to, and we'll see if you can in any way. Yeah, it doesn't look like it. It's pretty ugly. Like now you're just getting into so deep into this leg that it's really risky to try and hop on, right? But yeah, still the entry model, just continuing order flow, right? It's just first line of defense, cover the low, right? This is the only trade. I wouldn't even, for me personally, I probably wouldn't even risk this. I would just cover the low and take the 2 or 3R. Yeah.
So basically you get like 100 straight, and I was waiting for the like 4H scenario. Can you go on the 4H?
On the what?
On the 4H, 4 hour.
Yeah,
I was waiting for this scenario, this one.
I know what you're waiting for, bro. You're waiting for this. Yeah, exactly, bro. Doesn't happen, man. Just
Fuck me, man.
trade the order flow as it comes, bro. I'll tell you what's
Oh.
likely to happen here, though, is we pull up into here. If we were to pull down into here, first line of defense, POI stacking. This is likely some form of breaker on a lower time frame. POI stacking, be gone with it. I mean, does that happen? Bro, come on.
Yeah,
dude.
but basically I would count this whole leg as inducement for me if I avoided like
Yeah.
4 months ago. Yeah, for this leg whole
100%.
inducement, I wait for the job and then I get
Like,
fucking
dude,
taken. This is a fucking cheat code.
you can't make this up, bro. Like,
Yeah,
you can't make
fuck.
this up. I looked at this price action in detail like this, right? And this is
Fuck
just
me, man.
this is just following the rules of the plan, right? When there's a draw on liquidity, those type 2s hold. You look at the first line of defense, And like, come on, I didn't,
It's insane.
you know what I mean? And I'm not, it's not me being a smart guy, right? It's just a simple set of rules that I happen to stumble upon that fucking work,
Holy fuck.
right? Just got a little lucky. Yeah.
Does an extra confluence come from that swing structure break as well?
100%. Absolutely. Like for me, right, I was looking at this as swing structure, whereas Bobbin was arguing that this could be swing structure. So for him, he might have already been engaged bullish, whereas me, I would have had to wait for that break, and then this would have engaged me long-term bullish.
Right, because you're breaking to the upside.
Are you talking about this one?
Yeah, that one there.
Yeah, for sure. So this would have then switched my bias, and then I would have had this one to be swing.
Well, yeah.
Right.
Yeah, because you're planning, like, if that was to hold, then you'd be looking bearish.
Yeah,
Yeah, okay, yeah.
100% right.
then
And
because-
again, right, it's unique to everybody. It depends how you frame your trade idea, right? Like they might be a little bit different.
I see what you say as well. Like I
Yeah.
wanna see
Yeah.
structure as-
And I think this is one of the reasons as well as to why I had this as my long-term structure, because on the 4-hour, okay, on the 4-hour, this one isn't as clear, of course. Maybe it's up here, maybe it's up here, but this to me was definitely not swing because I paired it up with 4. And this is where that little bit of discretion comes into play, right? But
Well, it could have played like this, right? Like that, like that, like that, like that, like that.
yeah, this is where it gets a little choppy, right? So that's why
I'm
I
not
kind of
sure
stuck to my
wrong.
guns to the higher time
Yeah,
frame
right.
because it was more obvious to me. Right.
Yeah.
And I was hesitant to take longs as well, considering, this. So I was hesitant, so I won those extra confirmations anyways. But yeah, if you were open to taking longs here, you would have actually been on the right side and got some fantastic trades. But yeah, don't need to.
Anyway,
Going back to first line of defense here. Brian or Chris, let's do Brian, because I don't think you've answered anything today. Well, you have, but not just you. Where's first line of defense? Where can we potentially trade from if order flow is intact? Where's that type 2 coming in?
Oh, hold on. Let me get my button here. Up here.
Beautiful. Okay. So I haven't given you guys a PDF or videos about it, but where would we stack the POI on top?
Okay.
Just using
Wanna
what you
take the
know. You
whole
don't need the
range?
details, but yeah, just using what
We
you know.
took the whole range, but usually I would take this lower candle here.
Okay. So for me, what I like to do is general rule of thumb is if the wick is long, don't include the wick and just include the bodies. If the wick is short, include the wick and the bodies. Okay.
Yeah, you know what I'm going off though. We used to take that whole push down, right?
Yeah, 100%. No, I mean, it's not wrong.
But
You
it
just
is
want to
fucking
be
huge.
refined. Yeah. No,
Yeah.
you don't want, it's not necessarily wrong. It's just best to be refined, right? So, yeah. So really like we have this push up, push down. This is what we would call a breaker right here. And then we'll learn a little bit about that as well.
Okay.
flip zone
Or
as well.
that's actually a breaker mitigation block. Yeah, flip zone as well, but again, we're not really looking too much into flip zones and stuff, right? But yeah, if you do your own testing and you guys figure it out, like again, this whole program, I'm not expecting you guys to be carbon copies of me. If you guys want to take this information and make your whole completely unique trading plan that works for you, power to you, man. Like that's what I want to hear. Yeah, so going back to this, Brian, this is first line of defense. We've got a POI stacked on it. So what does that tell us? We probably shouldn't come below here or definitely not below here, right?
Yeah. It should
So
hold.
ISP is likely to happen within here and take out the highs. Let's just see what happens. Beautiful. Okay, where's the next one? Okay, POI stacking.
This candle here. Or let me clear that up.
Okay, wait.
I'll
So we
just take
have
this
we
last
have
candle
this.
here.
We have this. So we want to stack on top of the FEG.
Okay.
Yeah. So the whole thing, right? Okay, perfect.
Yeah.
This is not wrong, by the way. This is just a refinement of this overall zone. But when we're talking about first line of defense. We want to see where is price going to come into and then react inside of this FEG. Okay, pushes down. There's that FEG, doesn't come below. Holds, right? Body's respecting, doesn't come below candle 2. Right? So
Nice.
it's kind of scary when it comes
Yeah.
into it like that aggressively, but you just have to have faith that how FEGs operate, right? And that's it. Next first line of defense, we can repeat this all day. Here.
You could potentially play this off the 4-hour as well.
You absolutely could, bro. That's what I was saying to you. I think I messaged you personally, and I was like,
right. Yeah.
I've tested this with just the 4-hour and not too much, but like it pulls R, bro.
For us full-time workers.
Yeah, it fucking pulls R, man. Right. And there you go. We've come into that first line of defense. And see, for me, dude, I wasn't even following this order flow. So I actually wasn't aware of this until right now. But yeah, this is beautiful. And that gives the fact that this happened now, which I wasn't actually aware of, gives this trade so much more value to take longs here. Just because we understand how order flow is pushing now on the 4-hour. Yeah.
Sorry, just quickly, Kate, because I missed this whole line of defense thing. So just
To be in the last live on Friday.
Yeah,
by the way.
I'll have a watch tomorrow. So the POI stacking is that just an added confidence to find the FVG or
100%. So sometimes, and this is where it really comes into play, is sometimes you'll have more than one FEG to pick from, and then you'd ask yourself, okay, well, how the hell do I know which FEG to pick from, right? So, for example, maybe we won't do that. Let's do this. Okay, so for example, we have down here, we have one FEG, right? And we have 2 FEGs. Actually, we have 3 FEGs. Right? So you're asking, okay, well, which one do I trade from, right? So that's why we stack POIs. And we go, what is the first line of defense stacked with a POI? Is this FEG? That FEG is the most likely to hold. And we'll call this one a breakaway gap. Breakaway gap is a gap that doesn't get filled.
okay.
This is likely to hold. We're likely to have breakaway gap here and then continue. And there should be no reason to come back into this one.
Cool.
Yeah. That's
That makes
it
sense.
for today, guys. Any questions? This was a pretty long one, pretty loaded one. I'm not gonna lie.
Yes,
But-
sir.
Yeah. Any questions? Anybody drooling out the mouth or loaded with
No.
information? Okay. It seems like you guys all got it, which is awesome.
Thanks,
Really
man.
awesome.
Thank you.
All right, guys. Thanks. If anybody is struggling individually, just feel free to reach out to me, man. I'll help you guys one-on-one. It could be private.
Okay.
All right, guys.
Thank you.
Nice.
Yeah,
Take it
Thanks.
easy.
yeah,
Have a nice
Bye.
day.
bye.
Sure.
Bye.
Okay.